Because we're on the Bitcoin standard, there are no taxable events when you work with us. And that's one of the benefits of Bitcoin life insurance. The fact that life insurance is tax-free. When you do life insurance in Bitcoin, then your Bitcoin becomes tax-free. So let's say, for example, in the future, let's say 5 years down the road, Bitcoin goes to $1 million a coin. And you have a policy with us, and you want some cash. Option 1 to get cash is sell Bitcoin at $1 million. But you're going to pay a very large capital gains tax relative to your cost basis. Option 2 is generate a policy loan. So he takes it to his favorite exchange, Coinbase, and says, hey, I got 3 Bitcoin to sell. And Coinbase says, great, but where did this Bitcoin come from? And what's the cost basis for tax purposes? Well, he'll have a loan document that says this comes from my regulated life insurance policy at Meanwhile. And it says right here, the cost basis on these Bitcoin was established on the day I originated the loan. In this case, $1 million a coin. So Coinbase says, oh, great, $1 million a coin. You do a limit order sale of $1 million. So your cost basis equals your sale price. There's no delta, no tax liability, no Form 1099. You withdraw the 3 Bitcoin at $1 million each, 3 million cash in your bank account. You never need to repay the loan in life insurance. It carries a 3% interest rate on the loan. You can let that accrue over the course of your life. There's no risk of lapse. And your new death benefit nets down against the size of the loan. So you had an 18 death benefit, you borrowed 3, now your death benefit is 15. You're paying 3% interest on the 3 Bitcoin. So ultimately your death benefit will be 14 point something. And most importantly, arguably most importantly, you're never at risk of a margin call. So thank you, everyone. Good to be here. Meanwhile, it is a interesting concept when you think about life insurance and Bitcoin. I've been in the spaces, Jack said, for almost 13 years now. So I am a low-cost basis Bitcoin investor. I have a wife and kids. When I discovered Meanwhile last year, it kind of blew my mind. I solved a lot of problems personally because life insurance is tax-free. Whole life insurance specifically has all these tax advantages baked into it. Why? Because the government is trying to incentivize anyone who can afford it to buy life insurance. It protects you, it protects your family, protects your loved ones, creates less dependency on the state for handouts, for welfare, for any type of assistance. And as such, the government wants you to buy it, and the levers that they use, incentive mechanisms they use to get you to buy life insurance are everything's tax-free. Assets in life insurance grow tax-free. You can borrow money out of your life insurance policy, your whole life policy, tax-free. And when you do transfer assets to your family one day, that is tax-free as well. So when I discovered Bitcoin life insurance, I realized this is great, instantly signed up, and spoke to the company and told them, I've been in the space since 2013, and this is the single most interesting product I've come across in my entire career in crypto. And so, Meanwhile is a Bermuda-based life insurance carrier. We are our own carrier. Everything we do is in-house. Underwriting, risk, investments, you name it. These are some of our investors. We've raised a little over $140 million to date. And this is where it gets interesting. The fact that while we are Bermuda-based and regulated and licensed by the Bermuda Monetary Authority, we're really not much different than every other insurance company in Bermuda. And if you think about Bermuda, you realize that there are thousands of insurance companies in Bermuda. It's an insurance hub, one of the insurance capitals of the world. Rightly so, because Bermuda governs and regulates and licenses insurance companies very effectively, meticulously, onerously, trying to reduce risk, make it as conservative as possible, and ensure that life insurance is not a broken product, but that when it comes time to pay a claim, every carrier must be able to meet that liability. And so what separates us from the rest of the crowd of, trillions of assets in life insurance at Bermuda and globally, the fact that we do everything the same except our currency is Bitcoin. Literally, we are a holding company, operating company structure, where our operating company does not need a bank account. Everything's in Bitcoin. That means that you pay your premiums in Bitcoin, your death benefits paid out in Bitcoin, and you can get policy loans which are in Bitcoin as well, but at a new stepped up basis. But in order to explain how all that works, I kind of have to just create a couple of analogies to the traditional life insurance world. So with traditional life insurance, you go to a life insurance carrier and you ask them for coverage. You say, I'd like a $10 million policy on my life. And they'll say, great. They'll crunch some numbers based on your age, health, and other factors, and they'll dictate to you an amount of premium that you have to pay in dollars, either each month or each year. And in whole life, those dollars go into a mutual fund. And that mutual fund has a guaranteed growth rate of 4%, conservative. And every year it's up 4%. And over time, it might be up 20, 30% in decades. And because it's whole life, you can actually borrow out of it. And because everything's tax-free, you don't have to pay capital gains, or income tax or any type of tax when you borrow out of that whole life policy. And you never have to repay the loan. So if you could borrow up to 90% usually of the surrender value, and when you get a loan, let's say you borrow $1 million out of this $10 million policy, your new death benefit is now $9 million. It nets down from the policy loan, and meaning you never have to pay back that $1 million loan. Keep it for as long as you want. You pay zero taxes on that loan, and that's basically how the life insurance policy loan element works. And finally, when there's a claim, when there's a death, that $9 million left over gets passed down, paid out to your beneficiaries, completely tax-free. All of that in Bitcoin is similar, but there's one stark difference: the fact that Bitcoin is a scarce asset. It is a finite supplied asset, whereas dollars are an unlimited supply asset. And so to do everything in Bitcoin, you can't come to a life insurance carrier on the Bitcoin standard like Meanwhile and ask us for coverage. You can't say, I'd like a $10 million policy, or I'd like a 100 Bitcoin policy, because that would mean that we have to tell you how much premium that you have to pay in Bitcoin. But we don't know how much Bitcoin anyone has. It's a scarce asset. So we can't tell you have to pay 10 or 20 or 100 Bitcoin premium. We don't know how much you have. So instead, you come to Meanwhile with an amount of Bitcoin that you know you have that you want to use as premium. And you say, what do I get with this? Well, we will then crunch numbers based on your age, health, sex, smoking status, and give you a death benefit ratio that you will get relative to the amount of premium that you want to pay. There's never a dollarization, meaning we're never going to sell your Bitcoin. There's no realization event. We're not going to index to the dollar. And so because we're on the Bitcoin standard, there are no taxable events when you work with us. And that's one of the benefits of Bitcoin life insurance, the fact that life insurance is tax-free. When you do life insurance in Bitcoin, then your Bitcoin becomes tax-free. And so as an example, let's say a 35-year-old healthy non-smoking male came to us and asked for a policy. He comes to us saying, I have 10 Bitcoin, what do I get with it? Well, we'll crunch numbers and you get 17.9, call it 18 Bitcoin in death benefit. It's an 8 extra Bitcoin that you get, or an 80% return on your Bitcoin over the course of your life. How does 10 become 18 though? How does 10 premium become 18? Because in order to qualify as life insurance, we have to grow the portfolio. Every life insurance company is growing their balance sheet. They're investing their assets, they're buying, municipal debt at 6% coupons. They're able to generate yield and pass the yield on to the policyholder to grow their portfolio. And obviously they'll keep some of the yield for themselves. That margin is how life insurance companies make money. And so where does the yield come from? That is one of the most important questions here. How does 10 Bitcoin become 18? Well, we have a very conservative nature. We're regulated by a strict regulator that wants us to take little to no risk. And so we've come up with a solution to get Bitcoin-denominated yield with barely any risk at all. And the way we do that is we are able to work with low-cost basis Bitcoiners in the form of a fully collateralized one-year repo loan, allow them to swap low-cost basis Bitcoin with high-cost basis Bitcoin. And I'll explain what all that means, and I'll break it down for you. So let's say there's a Bitcoin miner. Bitcoin miners are earning income in Bitcoin. They're mining Bitcoin every day. And what happens is they get vintage Bitcoin. Every day they mine Bitcoin. The cost basis is established on the day that that Bitcoin lands in their wallet. But miners, like most other companies, they have CapEx and OpEx needs. They need to sell or get dollars somehow. And to go from Bitcoin to dollars, you either borrow against your machines or you sell Bitcoin. Now, which Bitcoin are they going to sell? Well, they have to pay capital gains tax like the rest of us. So does it make sense to sell Bitcoin you mined 5 years ago at $1,000 a coin, or Bitcoin you mined 5 days ago at $100,000 a coin? Obviously, you would sell Bitcoin you mined recently, closer to today's market price. So what do you do with all the old Bitcoin? As a miner, there's really not much you can do, because if you create any type of taxable event, you're going to incur this large corporate tax rate that is really going to eat away at all of your income and your revenue. And so when you have low cost basis Bitcoin as a miner, you kind of wish you did something with it back then, years ago. And so now it's just sitting there, and essentially they're Bitcoin treasury companies holding Bitcoin on their balance sheet with very little ability to do anything with it for fear of causing a taxable event. Well, until Meanwhile came around, being a life insurance carrier in the crypto space, we have very long dated liabilities, meaning that we have young people, 20-year-olds with policies who are probably not going to pass away for 70 years. And so our liabilities are long dated, and therefore we're duration seeking. We're willing to take long-term loans with the right types of counterparties that meet our conservative and risk-averse nature. And the loan that we created that solves a problem for miners and solves a yield problem for us is in the form of a 1-year repo or a repurchase agreement, where a miner can lend us low-cost basis Bitcoin, call it 100 Bitcoin. We'll lend them back 100 Bitcoin. That assumes today's cost basis. They can immediately sell that for CapEx needs. And at the end of the year, they can repay the loan or roll to the next year. Mechanically, they're going to lend us 100 Bitcoin. We charge them 3.5% yield up front, so we're going to actually send them 96.5 back. That 96.5 takes today's cost basis, which they can sell, use for CapEx needs. Now, what happens if our counterparty disappears, goes bankrupt, loses the Bitcoin? From our perspective, it doesn't really matter, because we have all 100 Bitcoin of theirs, and they only have 96.5 of ours, hence it's a fully collateralized loan. And like I said, at the end of the year, they can either repay the 96.5 Bitcoin, get their original low-cost basis back, or they can keep rolling to the next year, pay us another 3.5%, another 3.5 Bitcoin. So what do we get out of that? Well, we get 3.5% yield in Bitcoin-denominated terms, not dollars, in a fully collateralized loan, meaning that we have no counterparty or credit risk. Because if our counterparty disappears, we still have all 100 Bitcoin of theirs, they only have 96.5 of ours. We give 2% of that yield to all of our policyholders. That's how 10 becomes 18. That's how premiums turn into death benefit over time. We amortize out the yield to age 100 on any of our policyholders. So for that 35-year-old, that's 65 years of 2% compound annual growth rate, 2%. 10, 10.2, 10.4, so on and so forth, all the way to 18, if you do the math. And yeah, the 1.5% spread, that's how we as a life insurance company make money. So the policy loans are where it gets actually very interesting. And probably this is what most people speak to our company and sign up for. If you think about when you borrow money out of a life insurance policy, how does it work, and what's the point? Well, you don't have to pay cap gains. You get cash. You don't have to repay the loan. It's pretty great. Now, if you do it all in Bitcoin, the way it works is you're going to get new Bitcoin at a stepped up cost basis. So let's say, for example, in the future, let's say 5 years down the road, Bitcoin goes to $1 million a coin, and you have a policy with us, and you want some cash. Well, you really have two options. Option one to get cash is sell Bitcoin at $1 million, but you're going to pay a very large capital gains tax relative to your cost basis. Option two is generate a policy loan. The way that works is you come to Meanwhile, you log into your account, and you'll see that you can borrow up to 90% of your surrender value. In essence, that's a 90% LTV loan. You'll see it's now 5 years down the future. This 35-year-old was paying 10 Bitcoin a year, so that's 5 Bitcoin in premium. He could probably borrow up to 3 Bitcoin or so, 3.5 Bitcoin. And let's say he wants to borrow 3 Bitcoin out of his policy. Because remember, you're borrowing Bitcoin, you're not borrowing dollars. Everything we do is in Bitcoin. So he's going to borrow 3 Bitcoin. How does that work? He gives us a wallet address. We're going to screen the wallet address with Chainalysis, make sure we're not sending Bitcoin to North Korea or Iran. And we're going to send him 3 Bitcoin. Now he has 3 Bitcoin. Great. But he wants cash. What's he going to do with 3 Bitcoin? Well, he has to sell it. So he takes it to his favorite exchange, Coinbase, and says, hey, I got 3 Bitcoin to sell. And Coinbase says, great, but where did this Bitcoin come from? And what's the cost basis for tax purposes? Well, he'll have a loan document that says this comes from my regulated life insurance policy at Meanwhile. And it says right here, the cost basis on these Bitcoin was established on the day I originated the loan. In this case, $1 million a coin. So now while you might have paid your premiums with Bitcoin you bought many years ago at Coinbase at $100 or $1,000 or $50,000, and paying premium is simply just transferring Bitcoin from wherever it is in custody into our vault at Coinbase or Anchorage or custodians that we work with. You're not using that Bitcoin, you're not getting that Bitcoin in the form of a loan. You get new different Bitcoin from the life insurance company at a new stepped up cost basis, in this case, $1 million a coin. So Coinbase says, oh, great, $1 million a coin. You do a limit order sale of $1 million. So your cost basis equals your sale price. There's no delta, no tax liability, no Form 1099. You withdraw the 3 Bitcoin and $1 million each, 3 million cash in your bank account. You never need to repay the loan in life insurance. It carries a 3% interest rate on the loan. You can let that accrue over the course of your life. There's no risk of lapse. That's how we designed this policy. And your new death benefit nets down against the size of the loan. So you had an 18 death benefit, you borrowed 3, now your death benefit is 15. You're paying 3% interest on the 3 Bitcoin. So ultimately your death benefit will be 14 point something. And most importantly, arguably most importantly, you're never at risk of a margin call. Because what happens if Bitcoin then crashes to $200,000, has an 80% drawdown after it hits $1 million? Well, from our perspective, nothing, because everything we do is in Bitcoin, not dollars. So 1 Bitcoin equals 1 Bitcoin. From your perspective, you're never going to have to worry about the dollar price. You still have this $3 million. You have the 3 Bitcoin that you sold. Your death benefit just netted against it. You never have to repay the loan, but you have the option to repay the loan, which actually could be lucrative and interesting because now Bitcoin's at $200,000 a coin. You might have 3 Bitcoin times 200,000, $600,000 left over from that 3 million cash, and you decide to go buy 3 Bitcoin and repay the loan. Why would you do that? Well, you're going to stop paying 3% interest rate, and you're going to free up more loan capacity for yourself in the future to be able to borrow more out of your policy. If you think on the next bull run, Bitcoin's going to go to $4 million. And so that's an option. You can call it an arbitrage if you want. But we don't anticipate most people will do that. We think most people borrow and let it accrue. You're going to pay us 3%. Remember, the rest of your portfolio is growing at 2%. It's a net delta of 1%. And that's how the policy loans work on the Bitcoin standard. And finally, it is life insurance. So there's a death benefit component. When you do pass, your Bitcoin will be going to your family or your beneficiaries, whoever they are. And it's really important, actually. Some people overlook this. Some people don't realize that, they don't think they need life insurance. But the truth is that think about where you have your Bitcoin right now. And if you, God forbid, get hit by a bus crossing the street, do your loved ones know how to access your Bitcoin? Do they know where it is, the ledger, what your passwords, private keys are, how to access it, the Google authenticators, the YubiKeys, all the different authentication methods that you've created to access this digital bearer instrument that has no recourse? A lot of people have not figured that out. And as such, their Bitcoin could die with them. And that's a tragedy given the price of Bitcoin and where we all think Bitcoin's going to go into the future. And so in life insurance, you never have to worry about your Bitcoin dying with you. You don't have to worry that your family won't be taken care of. It's in life insurance. All your family needs to know, your beneficiaries need to know, is not how to use a wallet. They might not be crypto savvy at all. They just need to know you had a life insurance policy at this company, file a claim. We'll work with the beneficiaries and give them either Bitcoin or dollars if they want dollars. And we anticipate that some people will want dollars because there might be some beneficiaries who are, a spouse, the wife and her husband had this policy, and her husband was all this crypto savvy guy who got this policy and had a million different wallets, et cetera, and he's gone. And she has no idea how to use Bitcoin. And so she files a claim and she says, I don't want Bitcoin, I want dollars. Well, the Bitcoin on death receives a new cost basis. And you can either receive the Bitcoin or we'll help you liquidate it at Coinbase's trading desk or anywhere and help you wire the money into your bank account because Bitcoin receives a new cost basis, it's all tax-free. And so whatever you want, we're going to work with you to help you get the assets that are owed to you in the policy. And it becomes a very seamless concept when you think about how it all works. You get yield, 2% a year in Bitcoin-denominated yield, which, by the way, think about if the price of Bitcoin goes up by a lot, 2% a year in Bitcoin-denominated terms gets amplified by orders of magnitude. You get these tax-free policy loans, the ability to sell Bitcoin without paying taxes. And lastly, you get the fact that it's, your family is taken care of, your beneficiaries are taken care of. So it's a pretty powerful concept when you think about it all together. And I don't know if we have time, but I'm happy to take a couple of questions. If not, you can find, I'll be floating around. Yep. Sorry, it's a 10 pay. So it's a limited pay policy. You pay your premiums over 10 years in equal annual installments. For that 35-year-old who's paying 10 Bitcoin in premium, that's 1 Bitcoin a year in premium for 10 years, regardless of the price of Bitcoin, because 1 Bitcoin equals 1 Bitcoin. And while the price might go up over that decade that you're paying premiums, your death benefit's also going up. So if you got to stop thinking in dollars, you got to really think in Bitcoin for the value of what this product is. And yeah, you either pay your premiums over 10 years, or you can pay it all up front, and we'll escrow it at Coinbase for you and pay it into your vault, into your account for you, because it's a non-MEC. It's an insurance term that just means there's no taxable event. And it has to maintain that way. You can't pre-fund everything and then borrow max on day one. The IRS figured that loophole out in the 70s and plugged it, and that's what is a MEC, or a non-modified endowment contract. So that's how it works. Anyone else?
What happens if Bitcoin declines significantly?
1 Bitcoin equals 1 Bitcoin. Your premiums costs go down, but so does your death benefit. Bitcoin goes up. Your premium costs in dollars go up, but so does your death benefit. No, your death benefit is guaranteed and fixed from day one in Bitcoin-denominated terms. Yep.
Based on what I'm hearing, you're going to be effectively sponging low-cost basis Bitcoin over time. How does that impact the business model?
To us, Bitcoin is fungible. 1 Bitcoin equals 1 Bitcoin. So whether we have low-cost basis Bitcoin or high-cost basis Bitcoin on our balance sheet doesn't matter, because we don't care what the dollar price of Bitcoin is or was or will be at any point in the future. While others do, we don't, and that's our edge, being a regulated insurance company, to be able to take any cost basis Bitcoin, give you back Bitcoin that you might want because it is a different vintage. And from our perspective and our regulators' perspective, and everything is pari passu, it's equal. 1 Bitcoin equals 1 Bitcoin. I keep saying that a lot, but this is like this think in Bitcoin Michael Saylor concept that you really have to adopt. Last one. So if low-cost basis Bitcoin disappears and there's no more low-cost basis Bitcoin at miners or wherever to get the yield from, well, I think what we've seen happen and what will continue to happen is today's price will become low-cost basis in the future. If the price of Bitcoin goes to $1 million one day, then $100,000 Bitcoin is low-cost basis Bitcoin then. And so low-cost basis Bitcoin will always technically be around. The corporate tax rate is about 21.5%. So if you do the math, you can calculate what price Bitcoin has to be relative to today's price for it to be considered non-economic to sell it, where you'd rather swap it. And so if we all think that Bitcoin is going to go up over time, then it becomes a moving target, and there continues to be a trove of low-cost basis Bitcoin. We think there's at least 50,000 low-cost basis Bitcoin currently held by miners alone around the world, and that number is going to go up if the price of Bitcoin keeps going up. All right, last one.
Question. So would you leverage Virgin Coin the same way you would leverage low-cost basis Bitcoin?
To us, whether it's a newly mined Bitcoin or an old Bitcoin doesn't matter.
So low-cost or Virgin?
From our perspective, it does not matter. Yeah. All right, that's all the time I have. Thank you, everyone. Come up. Talk to me after.
Thank you, Jason.